Well, gas prices have been steadily declining, with the national average now at $3.55 a gallon. That is welcome news, with nearly 40% of drivers planning a road trip over the July 4th weekend. That's at least according to GasBuddy's new summer travel survey. That marks a 9% jump from last year. For more, let's welcome in Patrick Haan, GasBuddy head of Petroleum Analysis. Patrick, what does this all mean in terms of the demand picture?
Well, a lot of Americans have started to make the transition in light of last year's record-setting prices. Some Americans have made the transition over EVs. It probably won't be a record-setting holiday weekend for gasoline consumption. There are still some slowdowns that we're seeing when it comes to gasoline consumption. And so I would look for gasoline demand to be about 9.4 million barrels. That's still one of the higher numbers that we've seen so far this year. But that's going to be down from about 10 million barrels that we saw back in 2019. So still a lot of Americans hitting the road. Gas prices now $1.35 on average below what they were a year ago. That's going to save Americans about $20 every time they fill their tank up. Most welcome is 47 of the nation's 50 states seeing average prices over $1 a gallon less than what we saw a year ago.
Patrick, you just mentioned the average price there, $3.55. There was talk going into the summer that we could retest $4 a gallon. Is that still on the table, do you think?
Well, it's still a low-level possibility, especially in August. We've already seen some tropical disturbances that can affect refinery operations. Half of the nation's refining capacity is on the coast in Texas and Louisiana. So Mother Nature, if we don't see her play nice, there still could be an impact, though I think the odds are rather low. It's something to watch for, especially in August, once we get into the peak of hurricane season.
Yeah, it's certainly a good time to kind of look ahead to the rest of the year, Patrick, the second half of the year at least. You look at where oil prices have been trading. We're still seeing a lot of supply coming online from Russia, despite the cuts that we've heard from OPEC Plus, or at least Saudi Arabia. As we look to the second half of the year, I mean, where do you expect some of these prices to trend?
Well, I think we could go a little bit lower. I think really a lot of the disappointment that has offset OPEC's production cuts has been China. Chinese demand has been very soft, very lackluster, even as their economy has reopened after COVID-19. And the thinking earlier this year was that China could have a tremendous reopening that could spark global consumption, but it really hasn't panned out yet. And I think the second half of the summer, especially as we get into the fall, we could eventually see the national average falling below $3 a gallon, with the typical caveats. Again, hurricane season and refinery disruptions are the wild card. But once you get into October and November, we could see the national average making a run at that sub $3 a gallon level.
Patrick, even though we are seeing prices declining, we are seeing some states taking action, trying to limit some of the very high prices that we saw just about a year ago. California has a new law that they just passed aimed at stopping oil companies from what they say inflating gas prices. I was taking a look at your Twitter account, and you were saying that this could potentially backfire. Why?
Well, a lot of politicians have demonized the oil sector as being the lone wolf as the reason for higher prices. But what a lot of Californians don't realize is the cost of regulations is extremely high. That's why California has almost always led the nation with the highest gas prices, because they have their own blend of fuel. They essentially tell refiners how to do it. In addition to having cap and trade and wildly high gasoline taxes. So it's going to shed light on how the industry works, but it also could shed light onto how those regulations impact the price of gasoline.
Yeah, I mean, looking at just how this would work in California, I mean, it specifically calls for oil companies to hand over additional information. It's not sort of just jumping on and saying, well, we will decide who's actually price gouging. So ultimately, isn't that additional information a good thing?
Yeah, the price transparency is certainly good, especially if people sit down and try to understand how it all works, especially if the government makes it clear how taxes and regulation impact those refinery operations. So absolutely, shining a light on it is not a bad thing. But again, will the government disclose that a lot of the burden from high prices are from regulations in California?
Finally, Patrick, we're noticing this banner here, Norton Shores, Michigan. What's going on behind you? Is that just close to home?
Well, we've got a station. Yeah, it's I've hit the road myself already, making a jump start. The station behind me here earlier today was at $3.59, and since then the station is now charging basically the national average. So the perfect example right behind me of a station that's about $1.50 below a year ago to kick off the July 4 weekend.
Okay, certainly a good example there. Patrick Haan, GasBuddy, head of Petroleum Analysis. Great to have you on today. Enjoy the long holiday weekend.
Thanks for having me.